Welcome everybody to a new analysis of Tradomics. My name is Dario and today we're going to have a look at the main US tech stocks. If you haven't done it yet, I recall you to subscribe to the channel in order to be notified as soon as possible, because on this channel we have a quantitative method that gauge time. Therefore, because time is prominent in trading and investment, as soon as you get notified, as soon as you will be aware about the future direction of the price or how long the price can keep going in a specific direction. So let's start our analysis with Microsoft after the earnings release. So what has happened? The earnings release was positive, but the reaction of the market was basically negative. So this is another, let's say, proof to give you the basically the evidence that algorithms follow a certain pathway. And here, the methodology that we reported based on the different duration of the cycle is, um, let's say, can predict um, certain moves despite the earnings. And you will see that also on other stocks. So first of all, we have had from the stop here a duration of 29 bars to close a T plus 2. T plus 2 is a monthly cycle, and in this case is an upward cycle that connects one top to another top. So basically the time years was enough to eventually start a T plus 2. But of course, they could have also extended the duration of the cycle for more days, but 28 bars was already enough. So in terms of time, the HFT or high frequency trading had the possibility to start a retracement. The second thing is that this low, it's a prominent one, and thanks to this candle that was done on the 3rd of February, we went below the absolute low that we had on this candle. And here we have to be really careful, because this cycle is not just a weekly cycle, but can be also a monthly cycle. And this monthly cycle is now negative, because this candle broke up this candle from which the cycle started. And if we now gauge the duration, we have uh, 18 bars. So 18 bars is not enough to close a T plus 2, which requires a minimum of 24 up to 44 bars. Therefore, we might have from next week a bounce back to the upside, but be careful, because we can retrace and go lower this low, which is at $408.10. In terms of the short term, next week will be as following. So first of all, from this weekly downward cycle, we have a duration of 9 days. So basically, Monday/Tuesday, we can proceed to the downside. At most, we can reach Tuesday, but by Wednesday, we have to expect a bounce back to the upside, because time will be enough to close a weekly cycle. And actually, the duration can be extended up to 11 days. So Monday, 10th of February. So the first candle might be on Tuesday to reach the extreme low and then bounce back to the upside. Okay. So we have time to extend the downtrend until Tuesday next week. But then we have to expect a bounce. Now, how strong the bounce will be, it's something that we have to monitor over time. And the bounce back to the upside will be absolutely important, because we will receive from the market further information. Further information about what? About this cycle. Because this cycle is a T plus 3, it's a 3 month cycle that is encompassed between 48 to 89 bars standard duration. And for the time being, it has reached a duration of 64 bars. So basically, it has time to go to the upside from mid of next week and then return back to the absolute lows. So you have to be careful next week if we have a bounce of a dead cat. But 64 bars are even enough to close a T plus 3. And if this bounce will go over this first swing and important, this second swing, this is really our checkpoint, then we can have the beginning of a T plus 3. And a T plus 3 has to reach at least this level at $422. And subsequently, we have a resistant moving average 200 period. If we go over this swing, but if we not go over this swing, then you have to expect a bounce of a dead cat. So for the next week, shorter term, you are aware what's going to happen. Okay, so that's the situation we have on Microsoft. I repeat, we can, after a bounce of a dead cat, return to the absolute lows, because this, it might be also not just a T plus 1, but even a T plus 2. And if we have a return back to the lows, we're gonna be on the safe side eventually to let's say, consider to open long position after the 18th of February 2025, not before. Even if the 18th of February, statistically speaking, you will have just one possibility out of 20, okay, so 5% to start a new T plus 2 or even more than a T plus 2. Okay, regarding eventually the prosecution to the downside, the first target is here at $404.76, and the second one is here at $400. In the episode 81, at the end of my presentation on Amazon, I was describing the situation as following. So I was expecting after this candle a continuation of the downtrend, because we had to close a weekly cycle, and then a bounce back to the upside. And this is exactly what happened. So with the weekly cycle, we have reached a total duration of 7 bars. So this was the lowest. And then we had a bounce to the upside, because time was enough to do what? To close T plus 2 after 34 bars, okay, median duration. Therefore, here we can update the chart. T stands for Tracy point. It's a standard, let's say, word of psychoanalysis. And now we have to see what can happen in the next week. So first of all, if we gauge the duration here, we have 8 bars, so you can always check the duration. So here I put a new weekly cycle. And as for the Nasdaq analysis that I've done yesterday, and also for Microsoft, here we have 9 bars. So same situation on Amazon. We can have the continuation of the downtrend until Monday/Tuesday, and then we have to see a bounce back to the upside. Okay, in this case, Amazon has not a negative cycle as for Microsoft. So here we might expect the closing of what? We might expect the closing of a T plus 1. So bi-weekly cycle divided in first weekly cycle and second weekly cycle, and then bounce to the upside. Okay, so in this case, Amazon has more strength, and it will have more strength to proceed with this bounce to the upside. Now the thing is that from this top, which kind of cycle do we have? And the answer is at least we have a T plus 1, but potentially even a T plus 2. And now, if you know a little bit the rules of the cycle analysis, is that we cannot go back to this top before at least 8, 9 days. So this bounce might be strong enough, but we have also to wait a little bit more to develop a T plus 2. So let's monitor it over time. I'm not expecting already next week, the entire next week, to return back to this top. Eventually, if we return back to this top, we might have not just a T plus 2, but then a T plus 1, okay? But we monitor it over time. So at least you know what to expect next week. And also, another thing is that from this top here to here, we have 145 bars. So you have also to be careful eventually if we are not going to start something that is a T plus 4 hybrid cycle, because on Google, for example, we had this possibility. Okay, that was triggered by the earnings release. Now we have to see whether on Amazon will follow this the same pathway. But with this candle, we went lower this candle here, so we have the evidence that from here we have already a T plus 2, even if we need to wait the right time. So also be careful in case we don't not go back to the stop if this is a bounce of a dead cat, because we can also retrace a little bit more. But the first checkpoint, in case we're going to have more downtrend end of next week or in 2 weeks, is this at 225.86 dollars. Okay, so this is our checkpoint in case we have further downtrend. Okay, not for the beginning of next week, because we know that we're going to have a bounce back to the upside by Tuesday. But after this bounce, if we return back to this low, then you have to be careful, because here we might have more than a T plus 2. So my segmentation is that from this top at the moment, we have a T plus 3. So the plan would be having a T plus 2, then a second T plus 2, and then return to the upside. In any case, we will return back to the tops, because here we have a positive T plus 5 upward cycle that for the time being has reached 145 bars. So in any case, we will return back to the absolute tops. So no doubts about it. But the route in which we will return back to the tops might vary according to the cycle, and specifically the grade of the cycle that is happening from this top that was done on the 4th of February 2025. So short term bounce to the upside. If we are not reaching back to the stop, then here we have this checkpoint as set at $225.86. On Apple, since a while ago, I was feeling that this stop could have been at the beginning of something big. On something big in terms of white cycle. And actually, here we have already some evidence that this stop is at least a 6 months upward cycle, if not more. And why did I say that? Because if we gauge the duration from this stop here, that is a nearly upward cycle until this stop, here we have 260 days or 59 days. 259 days is enough to, it's a median duration actually for a nearly cycle. Therefore, from this stop here, we might expect a new T plus 5, something similar to what has happened here. And you see that the downtrend in this case needs to be enough. So you need to have a certain amount of candle lower the stop in order to develop the cycle. So here we are expecting something similar. So we will need a certain amount of candle below in order to develop the cycle. Okay, so how many candles do we need? We need a sub cycle of 2 degrees less. So in terms of duration, a sub cycle of a T plus 5 is a T plus 3. And a T plus 3, we know that it's between 48 to 89 bars. So at least we need more than 48 days below the top. But of course, if the cycle turns into a positive one, that we will need definitely more. So the key message is that if here we have a T plus 5, we cannot return it back to the absolute top, which is at $260 before, at least if they want actually to turn the cycle into a positive one, before a median duration, let's say, of a T plus 3, which is around 65 bars before beginning of April 2025. Okay, so this is a prominent information if you want to manage accordingly your position. But we know that if we want to turn a cycle T plus 5 into a positive, at least we would need ideally 95 bars. Okay. Um, Still, I put a question mark because we do not have so many bars already below the stop. But what we can say is that if we gauge now the duration with this top, thanks to the earnings, we have 23 bars. So this first cycle is a T plus 1 hybrid cycle, so a bi-weekly cycle, 23 bars. And from this top here, we might have not just a T plus 1, but even a T plus 2. So I as well update the chart. T plus 1 bi-weekly or monthly cycle in development. Okay, so that's the situation we have. And last but not least, we have to look at the other flip of the coin in terms of downward cycles. So regarding the downward cycles, here we have reached a duration of 188 bars. So 188 bars, it's not enough to complete T plus 5 because we need 189 bars. Okay, so from this low here, we might have the beginning of something that is a T plus 2 or a T plus 3. So the continuation of the downwards yearly cycle that has done a first 3-month cycle, second 3-month cycle, positive, positive, negative. Okay, so from this low here, we might have either a T plus 3 or a T plus 4, and we don't know the sign yet. It might be positive or it might be negative. Okay, and we will know this kind of sign in case this low will be broken down. In terms of short term, we have had the first here weekly cycle closed on this candle that was done when this was done on the 3 of February 2025. So now since then we have had 5 bars. So this bar here did not broke this low, but eventually if the low will be broken on Monday, then we will have a continuation to the downside, at least for another 1 day. So at least on Monday or Tuesday or Wednesday until maximum 11 days. Okay, if this level at $225.70 will be broken down. Otherwise, they can do basically whatever they want. They can return back to the upside, or they can stay at a steady state situation. Considering the situation we have on the Nasdaq on Monday, I would expect a little bit more to downside. And by Monday, I said we will have still 5 bars. So if Monday we will broke this low, then we will need Monday and Tuesday to the downside at least, but it can be prolonged until Wednesday or Thursday. So here on Apple, we have a slightly different situation compared to Amazon for sure, and even Microsoft. So here we have more room for downtrend for not just beginning of next week, but the entire next week. And one of the key resistance level will be moving average 200. Okay. Um, if we gauge the duration in terms of upward cycles, here we have um, 4 days. So here still room to go further to the downside. Okay, so on Apple, we have more weakness. So be careful next week, not just Monday and Tuesday, but the entire next week, because we might have further downtrend, and we can also go here to the moving average 200, which is for the time being set up at $221 roughly. On Meta, we have a strong trend, uptrend going on. In the last analysis, I was flagging this low as potentially the beginning of a T plus 3, and I said that this low, in order to be a T plus 3, shouldn't have broken down before a certain duration. We didn't have actually this situation, but I was just saying that given that here we add T plus 2 that was positive thanks to this bar, we could have add a continuation to the upside, and then this what happened. So basically analysis correct. Now the most important thing that you can notice on this channel and not on the others is, but how long can the price continue to go up? Because if we look at some indicators here, you have an overbought situation. But still, since sometimes we are in an overbought situation, since let's say Tuesday, 28th of January, but we continue to go up. So how long can we continue to go up? Well, the answer is pretty straightforward. So first of all, we know that T plus 2 cycle can last between 24 and 44 days. So basically, 44 minus 24 gives 20 days in which the price can start retracing. From day one, so the first day you have one possibility out of 19 to retrace. Then the second day you have two possibilities out of 18, and third day 3 possibility out of 17, and so on and so on. So 20 days is the range, and if we gauge now the duration, here we have 38 bars. Okay, so 38 bars means that in that range, okay, you have to subtract 38 minus 24, and this gives you 14 days. So now you have to remove the 14 days, or you have to compare 14 days out of 20. So basically on Monday, you will have 14 possibilities to go down, and the rest of possibilities, which is 6 days, to go up. Okay, so this gives you on Monday the possibility to continue to go up are roughly 30%, even a little bit less. Is that worth it with this possibility to continue and stay in the trend? This is a question that is for you. So I don't have the answer, but here it's a data-driven analysis. So on Monday, you know exactly how many days or which are the possibilities to go up and which are the possibilities to go down. And the trade is up to you. So having said that, and I recognize I've given you unimportant information, but if you want to know more about our analysis, or if you want to have an ad hoc analysis on other stocks, this is exactly what I say to in my private videos, because this gives the let's say the awareness whether a trade, open a trade either long or short is worthy in a particular point in time. If we gauge here the duration, we have in terms of downward cycle a T plus 2, 34 days. So here I copy and paste this one. So we have a monthly cycle. And of course, here we are on another monthly cycle. Okay. I have given you the short term, but how long can Meta continue to go up over the midterm? So from this top here, we have 210 bars. So here we cannot have a good indication because 210 bars are definitely more than a T plus 4. So here I have to consider this top as a T plus 3 or T plus 4. So if we take the T plus 3 entirely, here, well, we are actually close to the maximum duration of a T plus 3. So we still have time, as said, to continue to the upside with less than 30% on Monday. And I can let you imagine how many we will have from Tuesday onwards. But here we can also take into consideration that we are close to the maximum duration of a T plus 3. So then the retracement that we can have next week or in the next 2 weeks can be enough to first go lower this low at 675 and then lower to this low at 6,200, 6,025, 600, sorry, 625. So this is the first checkpoint, and this is the other checkpoint in case in case next week we will start a cycle that might be not just a monthly cycle, but something more. Okay. And in terms of downward cycle, we have midterm duration of 322 bars. So it's also true that we have here potentially the beginning of a T plus 5, either here or even here, I have to say. But if we gauge the duration, let's say from this T plus 3, we have 136 bars. So this retracement that is gonna happen potentially next week needs to be a little bit consistent, because at least we have to close this cycle, and the closing of this cycle needs a tail of a T plus 1 that needs to be negative in case they want to close a T plus 4. If they want to close just a T plus 3, then the retracement will be shorter, just a weekly negative downward cycle. But if we want to close a T plus 4 6-month cycle, then we will need a 2 weeks cycle negative. Okay, so be aware from next week that on Meta we can start a retracement to close a downward cycle and to begin an upward cycle that might be even more than a monthly cycle. Okay, so you are aware of this thing. Therefore, I hope that this video has given you a lot of insights. Okay, so let's move to the next one. So on Google, after the earning released, we have here the beginning of something that is more than a T plus 2. I can already tell you, because we have had such harsh retracement, and with this candle, we went lower this candle. So as for the last analysis here, I was expecting uptrend, so analysis correct, but I have to say that this top is not a 3-month cycle, but actually is just a T plus 2 upward cycle. So here I have to edit and put a T plus 2. Now the thing is that if we gauge the duration from this top here until from the top of the T plus 5 yearly cycle until the top that we had on the 4th of February 2025, we have 143 bars. So from here, we might have, or we have already a T plus 3 slash a T plus 4. This means that we cannot go back to the top at least for a month. Okay, so if you're wondering if Google will recover soon from the earnings release, the answer is no. Well, then it depends how long a month means for you, but I would say not in the shorter term. Rather, we have to be aware that here we potentially have a T plus 2 cycle that is negative. This cycle has been segmented as a first weekly cycle and a second weekly cycle. This second weekly cycle has reached a total duration of 8 bars. Let me take the right candle. So here, this one, sorry. So here we have 9 bars. So as for Microsoft and Amazon, we can have further downtrend for a couple of other days and then a bounce back to the upside. In terms of duration, this is the same situation that we have on Microsoft. We have enough time to close a T plus 3. We have 52 bars, but it's not given by fact that they will close here the next week, Monday and Tuesday, and then start a new cycle back again. Because if here we have a T plus 2, then the downtrend after a bounce of a dead cat can last until at least 24 bars, and 24 bars means that we can continue to go down until Friday 14th of February 2025 at least. So you have to be careful on Google that potentially we might have more downtrend rather than uptrend, and the stop here is something that we will meet not really soon. We know that here we have a T plus 5 upward cycle that is positive. Therefore, we have to, in order to close the cycle, we have to come back to the absolute tops. But the fact that we'll return back to the tops can also be not soon. So we have plenty of time in which we can return back to the tops. Plenty of time, it means that we can go up to the summertime and even beyond. So then you are aware about the time frame that we have on Google. Okay, so Monday expected another red candle, or if we will not go lower this candle, we can have already a bounce back to the upside from Monday, no problem, because we have already 9 days. But in the worst case scenario, we can go lower and then restart a bounce back. In case they close in the best case scenario for the long position at T plus 3 already next week, okay, then the first swing will be this one. So this level of price is our checkpoint for the short-term recovery, let's say at $194.55. Okay, so that's the situation that we have on Google, and I leave. So either we start already on Monday to have a bounce, or we continue to go lower and then a bounce. In case of short recovery, then this is the swing or the checkpoint to control. Okay, so that's the situation we have on Google, and let's move to the last one, which is Tesla. So on Tesla, as for the last analysis, I updated the chart as following. From this low here, we have the beginning of a T plus 2. This T plus 2 monthly cycle is a negative cycle, and at the moment we have reached a total duration of 25 bars. So this duration is enough to close the T+2, but we can also continue further to the downtrend until a median duration or a maximum duration, because now we have this condition. And therefore, on Tesla, you have to be aware that the price can continue to fall until a median duration, and a median duration will be 19th of February 2025, or up to maximum duration, which will be until the 7th of March 2025. Okay. So we have a time window in which we might have a bounce back to the upside, and now given the analysis that I have done before, how you can calculate the possibilities, okay, or probability to have a bounce. But this is the situation so far. If we gauge the total time yearly cycle from this low here, we have 201 bars. So 201 bars is already enough to close a T+5. So eventually we can continue to the downtrend, but if they want, they can then, starting from March, to begin something new, which might be a T+5. This is something that needs to be seen. So at the moment, I would not speculate too much about the situation that we have on Tesla. But on the short term, further downtrend, okay? And now you have, on Tuesday, you will have how many possibilities? You will have, given that it's 26th day, you will have 2 possibilities out of 20 to have a bounce back to the upside. Okay, so you will have roughly 10% possibility to start a new cycle and 90% possibilities to continue to the downside. So be really careful on Tesla. Regarding the target, we might close this gap up at 358 dollars, 300. Yes, this is at $345. So will be the first target, and eventually the second target will be this one at 326.50 $59. Okay, so that's the situation we have on Tesla. You know that low possibilities, but 10%, but the T+2 here is also completed. So that's the situation that we have so far. I hope the video has given you tremendous insights. If you want to support my job, you can put a like, and of course subscribe to the channel to get notified as soon as possible regarding all the analysis that I do on a regular basis. Thanks for watching, and see you to the next episode.